I'm creating this to show you how to figure out the magic number to ask for when you're learning how to budget for your new business. A lot of times people come to me in the initial phases and they have no idea what their asking amount is. And that's always my first question is how much money are you looking for to start your business? So the reason why that's important to know up front is that's going to set the tone for where you go to find funding, how you find it, and how much you're going to end up needing in the long run to sustain that loan revenue wise. So let's go ahead and jump into this kind of quick and dirty. I'm going to do a live budget build and hopefully show you the gist of what it takes to get to a rough ballpark number for building your business. Um, for the agenda for the session, we're going to talk about capital expenditures. I'm going to keep it very high level and simple. We'll talk about how much money you need for that. We're going to talk about operational expenditures, and that's going to include calculating the owner's salary. So if you've ever wondered, can I ask for a loan that covers, my salary for the first 6 months or for the first year? We're going to talk about how you do that and how you do it in a way that keeps your credibility and doesn't make it look like you're trying to take out a personal loan to cover your own expenses and, disguising it as a business request. And then we're going to talk about contingency, which is really important. If you don't build in contingency correctly, it can actually hyperinflate your numbers, and that looks really bad when you're going in for way more than what you need. A quick example of that is, I don't know if you've seen Shark Tank, but if they come in with numbers that are kind of through the roof, whether it's their revenue or if the costs are too low, the investors kind of sniff that out and they can tell that doesn't quite make sense or the numbers don't add up. And that's the kind of thing that any investor and any bank lender is looking for. They want to know that your numbers add up and everything seems to make sense and it's pretty logical. So we're going to talk about walking to that point during this time. Let's go ahead and jump into CapEx. So the definition to it, Googled, is simply the money spent by a business or an organization on acquiring or maintaining fixed assets such as land, buildings, and equipment. So this is all the things in your business. Stuff that goes into CapEx is usually the same build of things that go into your balance sheet as a depreciating asset. Not always, but in general, it's a good starting rule of thumb to figure out what you can take off for depreciation. For the example today, I want to take a food truck, more because it's simpler to grasp and it's an easier business. I think we all kind of can imagine what it would take to start a food truck. I've done a few food truck business plans and I know the gist of it, so should be a quick example. I'm going to go ahead and insert a chart, and for this, I like to use pie charts. Feel free to use whichever chart makes sense for you. And here I'm going to click the Excel button so that it opens in Excel for me. And the way you do this is you think about what tangible items do you need to open your doors. Okay, so let's say, for example, in our food truck, we're going to require a fridge. Let's say that we researched and know that the fridge is $2,000 for the specific fridge that we want. Let's say that we want a food prep counter, and let's say that we found a steal on that at $400. And then let's say we need a range for inside, and let's say that that's something around $1,500. And then let's say we need the actual food truck, and we will put that in at $15,000. Okay, before I jump out of this, a couple formatting issues just so that it's easy to look at. And I'm going to go ahead and sum this up. And this is going to become our preliminary CapEx budget, so $18,900. Okay, and I think I forgot to add a title, so let me go back and edit that. Excel. Okay, CapEx, 18,900. Okay. All right. Here's from another thing I was doing. So now that we have this quick and dirty, again, this is very high level. It's for example only. But now that we see what our CapEx is, I'm going to go ahead and move on to OpEx. Okay. So for OpEx, the definition is simply the money you spend on the ongoing costs of running a business or an organization, such as wages and the rent on the premises. So for example, a food truck, I'm going to insert another chart, and this time I'm going to do a 100% stacked Personal preference, again, use whatever you're comfortable with. And we're going to show the breakdown of just 1 month of operational expenses. So I'm going to delete these categories here. There we go, and parse it down a little bit, just for the sake of viewing. So for category 1, I'm going to call this month 1. So you kind of want to take a realistic, granular approach, just bite size. What is it going to take the first month to open my doors? And let's say that to open you need perishables. Let's say that bucket includes food. Maybe if it's a hot dog food truck, you've got hot dogs, buns, ketchup, you name it. We're going to need paper products. Okay, let's say it's forks, knives, spoons, plates, what have you. And let's say we have salaries / wages. And here's where your income is going to be represented along with anybody else that's working with you. So if you take a personal salary every month of, $8,000 and you're wanting to put that into the budget, you might need to be very careful. You want the business to be able to justify the amount of money that you get paid. So if your food truck only brings in $50,000 a year, 8,000 and so 8,000 times 12 months, you're looking at 96,000 in income. That's probably not the smartest idea. You want to make sure that your revenues match your efforts. And if you were running a food truck somewhere else or somebody hired you to, you can look at that benchmark too and say, well, if I was being hired by somebody else, they might pay me $2,500 a month. That's a good baseline to use in your budget. And of course, any profits above and beyond what your salary is, that's yours. You're the business owner. So don't be afraid to put in something realistic, but not extravagant, with the knowledge that every probably going to be yours in the end anyway. So I'm going to go ahead and put in for wages, let's say just for the sake of argument, $2,500, and let's say that includes your salary. Okay, I'm going to delete that. I made a mistake. Okay, $2,500 for salaries. Let's say paper products, about $500 a month, and perishables, $1,000 a month. Okay, so I'm going to, again, I have to edit this in Excel and make sure my formatting's okay. All right, I'm going to do a quick sum here. $4,000 a month in recurring operational costs. Okay, so that's going to be my OPEX preliminary budget. I'm going to go ahead and make this chart title easier to identify. OPEX, 4,000. Okay, so that ends up being our OPEX. Now, we're not quite done yet because we still have to build in contingency. And the way that is very common, very standard, is to put in about 20% on CapEx. Can vary by industry, by business type. It's somewhat of a fluid number, but it is a good ballpark. And then 3 to 6 months buffer on OPEX. Be very careful if you're leaning towards 6 months. Make sure your business justifies it. For a food truck, for instance, I'd probably only put in about 2 months of OPEX, because the reality is it's a cash business. It's either surviving or dying. And if you're not making it after 3 to 4 months, you should probably, shut down temporarily and change strategy because something's not working. So I'm going to assume for this food truck business, just because it's easier to give as an example, I will put in 4 months of operational expenditure just to give you a feel for what it might look like in reality for your business type, not a food truck. And we'll take it from there and see what our final numbers are. So I'm going to go ahead and move forward, and these are not current. All right. And I'm going to go ahead and build this out. So our OPEX, if I remember correctly, was $4,000. And then let me jump back real quick here. My CapEx was $18,900. Okay, let me add that here, $18,900. And now we have to talk about contingency. Where I had my Excel here, okay, close. Sorry about that, that was from another exercise. So where I had my numbers here, my CapEx is at $18,900, my OPEX is at $4,000. So for contingency, remember we said 20%. So I'm going to take my CapEx times 20%, and I'm going to take my OPEX, which is going to be, I said 4 months is what I thought was appropriate for the example. So equals OPEX times 4 months. Now remember that includes your salary for 4 months, so you're covered. Your grand total for your asking amount to start your food truck is about $42,000. So what you would do is you would come over here and update this. So 42,000, okay. And my other numbers, 37 and 16. Okay, let's see if I can do it without breaking it. Not quite. All right, and 16,000. Anybody who lives in PowerPoint is feeling pain over how I'm doing this right now, but hopefully this at least sets the example. And when you send this into an investor, you want to make sure that they can clearly see things map out, right? So if you want to add in for CapEx, 20% contingency, and for OpEx, make sure you list out this 4 months contingency. That's going to help you. That's going to be something that they're going to appreciate because you're being honest about where the numbers are coming from and how you're getting them there. I was trying to fix my alignment, but I don't think I'm going to be able to do it quickly enough to make sense. Anyway, so 42,000 is where you go. I'm going to walk into a bank and get 42, 43 is my asking amount. Now, the reason why this is important is a lot of banks have thresholds. So, for instance, some banks say if you're under 50,000, then you are handled by this department or you're eligible for these programs. Whereas if you're over 50, maybe that changes the game a little bit and you don't have as good of an option for interest rates or your payback period changes. That small degree of separation between 40 and 50 and 60 can make a world of difference. So it's really important to protect yourself before you walk into a bank or before you talk to an investor and know what your numbers are so that when they say, you know what, if only you were at 50,000, we could probably make this work. Well, maybe you can get to 50. Maybe you increase your budget for your fridge, or maybe you go back and make sure you didn't miss anything on your line items, because if you can get to 50 and if it makes a really big deal for you to save money on your loan, or if it kills your interest rate, if you take a different approach, then that's worth it. So know your numbers, make sure you understand what you actually need, and make sure you're being realistic, and put any unrealistic or assumptions or things that you're not sure about, or those ghost things that tend to pop up in the first year of business, put them in the contingency and protect yourself later. Okay, that pretty much wraps this up. If you have any questions for me, or if anything has been confusing, or if you feel like you need more clarity on something, please email me. I would love to help you. I'm here to support you, and I'm always going to be there for you on free consults whenever needed. This is Ashley Cheeks from Written Success.